Our long-term experience and history in investing and operating agricultural assets in Australia has shaped our investment philosophy. But we're also very mindful to look forward and contemplate how the external forces and trends may influence agricultural investments over the next 10 years. So with limited time today, I wanted to briefly touch on these trends, and we'd welcome the opportunity to continue the discussion post the conference and share further research and insights with you. So our first trend relates to consolidation. This has been occurring for decades, but we expect to see consolidation to accelerate and further the external capital gap to further widen. Fewer farmers are producing more. Over the past 20 years in Australia, the number of farmers have halved, while the value of output has doubled. Larger and more sophisticated farming businesses generate significantly higher returns. Scale and diversification brings productivity and lower cost of production per unit of output. This is nicely highlighted by the fact that 10% of farmers in Australia produce 50% of the output. That's 10% of the farmers in Australia produce 50% of the output and generate very attractive returns, whilst 50% of farmers in Australia produce less than 10% of the output and generate ultimately lower and non-competitive returns. So to achieve, and in addition, to achieve the industry's aggressive growth targets, we expect this consolidation trend will accelerate and the capital funding gap, which is currently estimated in excess of 130 billion, to widen. So there'll be many opportunities in our mind going forward over the next decade for external capital to come to Australia and invest in Australian agriculture. Our second trend, you could stay back on that one, please, Kate. Our second trend identifies the macro food demand thematic. To surpass any short to medium term trade access disruption. A lot has been made, and rightfully so, about the reliance upon Australian exports for the prosperity of our industry and the recent trade disruption and impact with China. And while it's true, effective trade and market access agreements are critical for the success of Australian agriculture as a broader industry, we expect the tailwinds of underlying structural demand for Australia's very high quality food, and particularly servicing Asia, to outweigh any potential further market access disruption that may occur. So ultimately, businesses and investments who are producing a diversified product and with a mix and a multiple market access options will be well served into the future. The third trend here is we expect the carbon market and science will develop significantly over the next few years. We heard a very good presentation just earlier around the Australian carbon market, and we see this trend to a low carbon, decarbonised economy is here to stay and will develop significantly. And while the Australian government has been very slow to commit long-term greenhouse gas emissions reduction targets for the industry, this will be led by the private sector in response to investor and consumer demands. There will be investment opportunities, and there will be more investment opportunities in the Australian carbon market. But at the rate of change and knowledge development occurring, we think it's wise to approach with caution until science and the knowledge gap improves a little more. The perennial pasture-based systems that we talked about earlier today and heard about are creating a lot of attention right now, and rightfully so. But in time, we're very confident there'll be a broader recognition of the positive role agriculture and a broader industry can play in reducing emissions and the impact of climate change here in Australia and globally.